You've long talked, President Kaplan, about your concerns about the effect of monetary policy on financial markets. It's hard not to look at some of the things that are going on right now, from GameStops to Reddit-fueled short squeezes, and think that maybe there aren't some excesses going on. To what extent do you see that linked to monetary policy?
So I don't see anything right now systemic. I'm watching this very, very carefully. I'm looking at financial stability questions in the non-bank financial markets, funding risk. I think part of what you're seeing, I think there's a lot of factors in the current situation, but one of them, yes, is there's a substantial amount of liquidity, and we're seeing that at play. I still think we need to be doing what we're doing right now in the teeth of the pandemic. But again, I think as we move beyond it, it'll be healthier to start limiting this liquidity and normalizing monetary policy down the road. The issue is, I'm going to avoid talking about when that might be. But yes, some of the current situation, you're seeing one of the factors is there's a lot of liquidity, and some of that relates to Fed purchases of $80 billion of treasuries and $40 billion of mortgage-backed securities every month. I think it's wise for us to acknowledge that.
The other side of the liquidity from the Federal Reserve is concerns about inflation. I wanted to ask you broadly about whether or not that's something you see coming down the road, but more specifically, being the work that I know the Dallas Fed does about oil prices, I've been surprised that given the lack of demand right now for oil, the price has held up quite so well. Is that something you expect to perhaps go up a lot more when the economy returns to normal?
Yeah, we do. We expect the global oil and gas markets will get into rough balance probably sometime in early 2022. You'll see production this year we're in probably flattish, but as the year goes on, there's no doubt that driving will increase. As long as all goes well with the vaccine and with the virus, mobility will increase, driving will increase, consumption will increase. In terms of inflation, it wouldn't surprise me to see during this year some inflation spikes in certain items. We see shortages of things like semiconductors, metals, wood products, packaging products. I think a lot of that will be transitory. I think the longer term issue is going to be, as the cyclical forces of inflation build, how much are they offset by technology-enabled disruption, globalization? I think the jury's out on how those forces will play out.
Shepard Smith here. Thanks for watching CNBC on YouTube.